Hey everyone, me Kevin here. At this point, you've probably heard that the market is doing pretty dang miserably. It's very red at the moment. And this sort of volatility really started back on July 11th. On July 11th, we had this sudden drop in the Nasdaq 100 and folks thought, oh, it's just a rotation into small caps. And I argued that there was a chance we could be going into an environment where even good news turns into bad news. That's because of two simple reasons: concerns over valuations being stretched and an election coming up. Well, folks, exactly that is starting to play out at this very moment. Now, this video is not to pat myself on the back. This video is to tell us what do we do next. Because look at the disaster, my friends. The triple leveraged IWM, so the Russell 2000, down 5.2%. Vertiv continues to crash all day long. They do cooling for AI chips. In other words, AI like NVIDIA H100s or whatever, Blackwell chips, they're deemed to be that supplier of water cooling for those Blackwell chips. Whoops. I guess all of a sudden when OpenAI comes out and says, yeah, we're going to lose $5 billion running new models for our system, and now Elon is suggesting that Tesla investors should support a $5 billion investment into the likely money losing, I don't know with certainty, Grok. If OpenAI is losing money, I can only imagine how much money Grok is losing. Then what we're really doing is we're throwing more good money after bad. Remember that $5 billion, I want to make sure I said billion, not million, $5 billion. OpenAI projecting $5 billion loss. Elon wants to raise $5 billion from Tesla money into Grok. Mind you, that could build half of a gigafactory, but let's be clear, he's long given up on expanding capacity at this point. This is not a Tesla video, though. Point is, we are being told by the market now, and it's been going on for 2 weeks now, 13 days, that this valuation growth might not last unless we actually start seeing some profits from artificial intelligence. And Google yesterday told us the answer to profits from artificial intelligence is no. Yes, we can make more high-quality ads, we can make more high-quality products, we can be more efficient within the company, but guess what? We're not making big dollars on the headline thanks to AI. And my warning that good news might turn into bad news, because Google's report was actually very good, has come true. And again, this is not to pat myself on the back, it is to ask the question, what is next? Because when Vertiv is down 12%, Google is down 5.2%, you've got stocks up 14%. It just keeps going and going and going. This is a semiconductor short ETF. It just keeps running. Made money, traded it today, sent alerts this morning. I go, look, calls on stocks, baby. I'm up. I hope you're up too. But we'll talk about strategy going forward. But let's be clear, there's a lot of pain. Tesla, 11%. ARM, 7.5%. The Nasdaq, look at it. It continues to fall. Crypto's selling off. Just this weekend, I sent an alert to my course members. Hey, we might end up seeing a Bitcoin sell-off with what's going on with a potential Nasdaq 100 sell-off. And we're seeing it. It's happening right now. But again, what's the game plan going forward? That's the hard thing. What do you do going forward? Because Palantir's down 6.2, AMD's down 5, Meta's down 5. This is a huge sell-off, 10% on super microcomputer. My goodness. Dell's down 7, CrowdStrike's down another 3.6%, Cloudflare's down 5.9. This is a complete disaster. Rocket Mortgage down 3, Apple's down 3. Nothing is safe today. The volatility index is up 20% today. It's kind of wild. So what's the solution? Well, here's my take and my game plan. My take is this market's probably going to bounce over the next couple days. Mostly because the earnings that we have over the next couple of days after what we already had, which was Google and Tesla, in my opinion, aren't that critical. Chipotle, Ford, ServiceNow, maybe, Las Vegas Sands, Royal Caribbean, American Airlines, Deckers, Texas Roadhouse, LendingTree, 3M, fine. But that's not really going to move this market. You know, next week we'll have like SoFi and PayPal, but then next Tuesday you're going to get into some that might make or break the market. Like, again, that's AMD, Microsoft, and otherwise. That's when we really start getting into it. We get Qualcomm, Meta, ARM, all next week. Lam Research. These are going to be pretty critical. We also get Apple and Amazon and Intel and Coinbase next week. So next week's going to be huge. But here's my take. I think after this insane sell-off that we have today, there's a good chance we have a bounce tomorrow. I think there's a good chance Tesla will bounce, IWM, the Qs, all this stuff will bounce. People will look at it again and go, you know what? It was just another, one day healthy correction. This is what everybody told me on July 11th. They're like, oh, Kevin, it's just a healthy pullback. Okay, it's not the sign of anything larger. Fine. So today we'll have our little healthy pullback, quote unquote, and then we'll bounce. We'll bounce over the next few days. That's fine. It's very, very rare to have multiple days in a row of the NASDAQ 100 being down 3%. Look at it on the chart here. Okay, so we're going to be supported by probably the 460 line here. You've got that nasty head and shoulders that's really starting to build out. But I think what will happen is you'll finish building out the shoulder. Quite frankly, this shoulder was very short and we already broke past it. We might even recover. Might recover back to 476. I don't know what's going to happen within the next 2 weeks. But I want to be crystal clear about what I think the game plan is between August 1st, give it a week from now or whenever, and the election. I think the market's going down, almost straight down. And that makes me very nervous because I think it's going to be, unfortunately, recessionary. I don't like saying that, but I think it's going to be recessionary. It's bad. There's a reason why the fund that I manage went to 25 to 30% cash over the last 2 weeks here, because we started to see the signs. There's a reason why I've been saying, hey, I can't go super bullish here, I'm nervous about some issues here. We're not too far off from the greed and fear index going to straight extreme fear. But look at the bond market. What is the bond market telling us? The 10-year yield just jumped 4.3%. Or 4.3 basis points, rather. It's up at 4.28%. Now, what's wild about that? Well, you have to compare to where the 2-year is right now. So you can do this with me. All right, let's do it. Look at this. 10-year, 4.28. Look at the 2-year. The 2-year is right here, 4.41. We are now just 13 basis points inverted. In other words, this 2-year yield is crashing while the 10-year is going up. That is a sign the market is getting more and more nervous about recession in the near term, and of course rate cuts, but likely forced rate cuts. And at the same time as the market gets nervous about rate cuts in the near term, the market prices in those rate cuts could lead to more inflation in the longer term, so hence those longer term yields go up. Now, I want to be very clear about this. I want to try to make this as simple as possible, okay? I think the positioning is wait for some bouncing over the next few days here. Maybe you just want to be in now, or go in small now and grow that position over time. Be willing to DCA. That could be an option too. I think the positioning, not personalized advice, is quite frankly, NASDAQ is probably going to go down to 435. That's NASDAQ 100. So it's down. You want to increase cash or go short. You could go call options on SQQQ or whatever. Buy shares of it, I suppose, if you want. I think the semiconductors will continue to roll. SOXS is an interesting option. Again, it could be red tomorrow because I think there'll be a little bit of a bounce. That'll be a DCA opportunity. I think Tesla's probably going back to 180. I hate saying that, but it's probably going back to 180. And honestly, going back to 180 would be generous for the pain that Tesla still has between now and when we actually get to like really affordable interest rates. You don't want to revisit 140. But what's interesting is it's not just the yield curve that's steepening so substantially, increasing the odds of recession. It is also the market starting to price in substantially more cuts. Listen to this. For January, we are now pricing in 3.3 cuts. That is the highest level we've been at, 3.3. Yeah, 3.3. We are pricing in a full first cut for September. We're pricing in 1.7 cuts by November, so you could be getting a September cut, November cut, and a December cut. So in December, we're also pricing in 2.64 rate cuts. So unfortunately, and I really hate this, I think after a bounce here, you're just going to keep bleeding between now and the election. So I'm not trying to like hop on this bandwagon and go, oh, look, the market's red today. See, look, market's red. Ha, 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 ha. I've been screaming this for the past 2 weeks, especially to everybody in the course member live stream. It's been almost every single day that I'm like, raise cash. I'm nervous. Here's why. Things are about to roll over. They don't have to roll over all at once, although today feels like it's an all at once day. But again, I think we'll bounce off that. I think what you'll end up with is a bleed. And so some sideways, the occasional day up, leg down. Some sideways, occasional up, leg down. I don't want to say that because I think it could lead to a recession. It's not great. But in the event we go into recession, we're going to see rate cuts rapidly. And that will be glorious. When the Federal Reserve dramatically cuts, that's when we might actually signal a bottom for the market. The question is, how much cash are you going to have in your pocket between now and then? Anyway, if you want some more of my perspectives, make sure you're part of the course member live streams. You get lifetime access. Join the courses on building growth linked down below. Go to meetkevin.com. It's really simple. The price is going to go up in a few days. The price always is guaranteed to go up over time, so consider joining. It's not personalized financial advice. You just get my perspectives like this, raw and on a daily basis. Here's what I'm seeing. Here's what I'm thinking. Here are the plays that I'm thinking of making. Here are the plays I'm thinking of not making. And people look at that information and they can do whatever they want with it. You know, some people are like, yes, Kevin, I'm going to go on calls on Enphase with you this morning because you're right. It's probably going to go to 119. Your boy Kevin actually paper-handed it a little too early. Anyway, despite that, what's hilarious is I need to listen to myself more often because look at this. Straight up from the 113, which I always call out these lines, to 119. It always matches these lines. And then look what happened as soon as you lost 119. Oh, wow, right back to 113.40. In fact, I sent course members an alert when it was at 119, and I said, hey, ding, 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 it's at 119. This could be a good opportunity to take some money in case you haven't taken some money out yet on that Enphase trade. And so that way, like, if you're not paying attention, but at least you get an alert, it's like, oh, nice. That's awesome. Thanks, Kevin. Again, no guarantees we could make money. But that's always my goal, is to share really quality perspective. Anyway, other people have asked me, what about Bitcoin? Bitcoin's going to go down too. And so are small caps. It's all going to go down together. Now, again, I think we'll have a bounce, but that bounce is, in my opinion, just an opportunity to raise a little bit more cash and just take your time. Slowly move out of this market and let's get through the election season. I'm saying it here in July, and I don't want to be the perma bear fear monger, but I am nervous. And again, I think we'll get green tomorrow, but it's just gonna go even more red between now and the election. Sorry, folks. Goodbye and good luck.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.